Hey guys, this is Ellie with Dream Credit Financial. Today I will talk about what to look for in your credit report so that you can raise your credit score. Once you have your credit report and you know what your credit scores are, you will be able to tell where you stand and where many of your credit problems lie. So that way you will know what you need to change so that your credit score goes up. And that's exactly what we want, for the credit score to go up. If you have a poor score, try to see in your credit report what could be causing the problem. And here are the things that affect your credit the most. When you have your credit report in front of you, ask these questions. Do you have too much debt? Too many unpaid bills? Have you recently faced a major financial disaster such as a bankruptcy? Have you simply not had credit long enough to establish good credit? Have you defaulted on a loan, failed to pay taxes, or recently been reported to a collection agency? When you're creating your action plan, you need to know where most of your credit score is coming from. And this is what we're going to talk about now. Your credit score is made up of the following factors. Number one, payment history. Your payment history accounts for 35% of your credit score. What does that mean? It means that any late payments, loan defaults, unpaid taxes, bankruptcies will count against you the most. Always, always make your payments on time, because only one late payment can drop your score by like 30 points. And you can't do much about your financial past now. But starting to pay your bills on time, starting today, can help boost your credit score in the future. So take a note of this. If you have late payments on your report, you'll have to fix it. And I will show you how to do it in a future video. Number two, amounts owed account for 30% of your credit score. If you have a lot of current debt, it may indicate that you are stretching yourself financially thin and that you will have trouble paying back debts in the future. If you owe a lot of money right now, and especially if you have borrowed a great deal of money recently, this fact will bring down your credit score. Now you can boost your credit score by paying down your debts as far as you can. And in a future video, I will cover more on this as far as how many percentages you should have on your credit balances. Number three, how long you have had credit makes up 15% of your credit score. If you have not had credit accounts for very long, you may not have enough of a history to let lenders know whether you make a good credit risk. Not having had credit for a long time can affect your credit score. And you can counter this by keeping your accounts open rather than closing them off as you pay them off. And listen to this. Never ever close a credit card, especially if you've had it for many years. Because if you close it, you will be losing years of credit experience and your credit score will drop. Number four, the types of credit you have accounts for 10% of your score. Lenders like to see a mix of financial responsibilities that you handle well. Having credit cards that you pay, as well as one or two types of loans, can actually improve your credit score. If you're starting to build your credit and don't have any credit cards yet, you can start out with prepaid cards. I usually recommend the Credit Builder card because they don't do a hard hit on your credit and there is a guaranteed approval. So I went ahead and I posted a link below in the description. Make sure you check that out. If you keep these areas in mind and make sure that each is addressed in your personalized plan, you will go a long way in making sure that your credit repair plan is comprehensive enough to boost your credit score effectively. So now that you know what is affecting your credit, let's talk about what you can do to fix the situation. And I will cover this in future videos. Thank you for watching and make sure you subscribe so you don't miss any of the future videos.